Hi, and welcome back to FANG Friday. This is Ross Healy, Chairman of Strategic Analysis Corporation. Last week, I observed that balance sheets, and therefore our structural prices, can often change unexpectedly at a quarter's end due to adjustment factors that are not immediately obvious. We are therefore extra careful at these times. As a for instance, a stock may come up to a breakpoint and break out, or appear to, around a quarter's end. But when we get the balance sheet, there was a larger expected rise in the book value, and therefore it turns out that that breakout actually didn't occur. Or, if a company has been buying back expensive stock, meaning at a high price to book value, the book value of the remaining shares may drop to a larger extent than the market knew about, and therefore a breakout may occur that we didn't know about. Now, the market adjusts to new balance sheet information almost as soon as it receives that information, but will tend to trade cautiously close to a reporting time until the balance sheet is published and the breakout, or the breakdown, is actually confirmed. To be specific, last week I showed you the charts of Apple and Nvidia, both of which were at important structural support resistance level, which is what I call a break point. We need to be careful in both cases, but in the case of Nvidia, it is particularly important to be a bit cautious, as you would not want to get too bullish if the stock breaks out until the breakpoint is actually confirmed by the June balance sheet. I'm not so concerned about Apple for two reasons. The first is that over the past 10 years, the shares have been quite extended whenever they reached up to their fair market value. Second, I am personally expecting a sort of a poorish quarter for the company, so I'm not sure where the shares can go, at least until they report in any case. I tell you what I find intriguing about Apple. For all the share buybacks, they haven't done much at all to change the trajectory of the earnings and therefore the fair market value, which you will see when we look at the Apple chart. As for the rest, well, let's see what happened this past week. Okay, today's overview of the 6 FANG stocks will necessarily be fairly short for a couple of reasons, and the most critical one being that we, of course, do not have any balance sheets yet or any earnings, and that's, as we're going to see very shortly, is going to affect a couple of the stocks. Anyway, let's start with, usually I start with Amazon and Facebook because that's our two buy holds, and they've been trucking along very nicely, but I'm going to start today with two stocks that are sort of at what we call a crossroads. And a crossroads occurs when a stock is trading right at one of our breakpoints. And in this case, of Nvidia, it's trading right at its HB1 price, which is 10 times book value. Of course, the stock has very, very poor supporting earnings underneath it, and as you can see over here, the downside risk in the stock is 30%. However, that doesn't stop this stock from going higher, certainly hasn't in the past. So when it comes to a critical breakpoint, we want to say, okay, what now? And that, of course, is the question, what now? We have seen the first quarter, it was pretty bad. That's what drove the stock way down here in the first place. But now it's recovering because the Bitcoin has bounced back and brought, I think, a certain amount of enthusiasm for a semiconductor stock like Nvidia, which really services that industry. However, note that the stock has got right to the breakpoint. In other words, it's at a decision point. And the question is, well, Ross, what's the decision? And I have to tell you, right now, I don't know. The stock actually poked a little bit above, saying, well, things could be pretty good. But equally as quickly, or in fact, virtually the next day, it lost everything. So it's just hanging right there, waiting for those earnings. If the earnings are good, you can bet that the stock will probably have a nice surge from here because it's right at a break point. If the earnings are poor, then it would be a pretty safe bet that this stock is going to head lower and perhaps right back down to its bubble price, and maybe, given the fair market value, even lower. So unless you have some insight into what those earnings are going to be, I think that Fred Hickey of the High Tech Strategist would say, I think they're going to be lousy, but unless you had any more insight into it than that, and we don't, we would have to say the stock's at a point where we have to let the information push the stock. For my own personal thought processes, I think I tend to go along with Fred Hickey of the High Tech Strategist and be very nervous about what's going to happen in the stock. But nonetheless, we can't tell right now. The second stock that's also at a break point is Apple. Now, you see, Apple is really at this confluence of its fair market value and its bubble price, which is about $200. In fact, it's a little bit above that, about $204. However, I am inclined to ignore the bubble price and just use the fair market value. And the reason for that is for the past 10 years, it's been the fair market value which has actually contained the stock very nicely. That's actually one reason. The second reason is that I also suspect that the company may have been buying back stock, and therefore when we get the actual balance sheet, the bubble price isn't going to be here, but it could be down somewhere, perhaps even as low as that, if we can project that the slope of that previous line down to here. So we don't know actually where it is. What we do know, however, is that the stock is at or a little bit above its fair market value, and that has tended to be it for the past 10 years. The other reason that I would be really concerned about Apple right now is that the first quarter was nothing short of a catastrophe. I don't know what the second quarter will bring, but unless there is some kind of miracle on 34th Street, it's difficult for me to be terribly optimistic about the look for Apple when it's already trading above its fair market value, and the fair market value is falling. As far as Amazon is concerned, there's nothing really much to say here. The stock continues to truck along just nicely. As I said before, the HB3 price, which is 16 times its book value, is growing at about 30% per year, and that means that if the stock just sort of stands still, it tends to be going up for the holders of the shares. Facebook was a buy. It kind of looked as if for a moment that it wasn't. It dropped very sharply, but we said at the time, just be patient. Usually when you get a breakdown, you get a pullback. We got a pullback, and then the stock broke right back out again and continues to move higher. So we are happy holding Facebook and even calling it a hold buy, as long as that mid-super growth price, which is 5.5 times book value, holds. Alphabet, well, we had a nice sell on the stock when we started out. It's been rallying a little bit, but not enough to be of much concern to me. I still think that the stock wants to go to its super growth price. That's 3.5 times book value, and that is an extremely
important breakpoint in the mathematics of structural valuation analysis. And at that point, it would be a very, very strong buy. However, right now, it's in the middle of nowhere, and I am not inclined, with a sell on the stock up here, I'm not inclined to move into it now. The last stock is Netflix, but all we can say about Netflix is that we've had a sort of an avoid on the stock ever since we started this exercise, 4 months ago, and the shares have fundamentally gone sideways. So I have no interest in changing my mind at the present time.
Anyway, that was the week that was. Where things are going from here, for one or two of those FANGs, I would really now like to have balance sheet updates. Two things to look forward to. As of July 15th, we'll have been providing you with our readings of FANG stocks for 4 months. And it's probably about time to see how we have actually managed to do on a portfolio basis. So far, I think that is actually pretty good. But we'll give you the hard facts then. For those of you who are interested, I will be appearing on BNN Market Call at 6 p.m. on Thursday, July the 11th at 6 p.m. We will, of course, be back next week for FANG Friday in any case. Until then, this is Ross Healy, Chairman of Strategic Analysis Corporation, reminding you that nothing, including investing, is difficult if you've got the right tools. See you next week.